All right, we are back. Welcome to the 5ers Live Trading Room. It's Tuesday. We got Victor to the left of me. We got Saul to the right of me. I think that's left and right. I don't know if it's mirrored on the live. Whatever. To the both side of me, we got two very great traders, and it's going to be an exciting session today. We don't have Saul for as long as we usually have, so make sure that if you do have any questions for Saul, make sure you ask them in the comments, and we'll make sure to go through all of that today.
Just 10 minutes less.
What's up, Henry?
Not big deal.
Hello, everyone. Right. This is a great day to be a trader. We have a lot of store. It is. I mean,
I don't know, man. I've been stopped out of 2 trades today. I guess it depends on what trades you're taking. But yeah, every day is a good day.
Exactly. That's my point. We had NFP Friday, so this week can be very interesting to see where the market is going to go post NFP. And tomorrow we have CPI and PPI, and also the ECB rate decision. So these are exciting moments to be trading for your month. So let's get started.
Right. So Saul, I have a question for you. I'm working on a trading plan. So I think last time I edited my trading plan was in 2019. It's been like 5 years since I started working on that, because I feel like I had the plan, I created the system, everything was going well, so that I didn't really need to, everything just went on autopilot, But now I'm changing my approach a little bit, and I feel like I need to go back to my trading plan. I need to fix, change a couple of things. And I talked with Victor about this before going live, that the approach I'm using now, I'm finding it very successful, much more successful than the approach I had before. And but there's more discretionary decisions involved with this new approach. So I feel like I want to try to get rid of that discretion, and therefore I'm going back to the trading plan, and I'm trying to define what a good setup looks like. So I'm trying to look at the discretionary decisions I'm making. What are those what are the decisions based on? Maybe it's a break and retest of a specific level. Can I name these levels? Can I name my discretionary decisions? Discretionary decisions with names and structure. So with your trading approach, would you say that, would it be possible for you to create a systematic approach around the way you're trading? So an example of that would be, I'm sure you're familiar with the concept of like last high pre-breakout, things like that, and clean levels, untested levels. Would it be possible to, create a systematic approach around the way you're trading?
It's hard because, I remember myself being part in a workshop when we tried even to make an EA that would trade the way, let's say, I trade. And it's very hard because, EAs and code, they just understand 1 and 0, right? They understand, okay, when this happens, you do this. Probably today, if there's some, I don't know, AI tools that I'm not familiar with, maybe the systems, they can start learning something. But at least, back in the day when we were trying to automate the way I trade, it was very hard, because with our eyes, it's very easy to see things that it's very hard to translate into code. So that's why, I remember myself also struggling into putting my approach to trading into a straightforward action plan when things happen, because it really changes. There's a lot of factors, but what you can do in order to have some structure in your trading, if you're trying to be more discretional, is naming or being minded of the factors involved. Okay, how the volatility, the momentum, the levels, the risk allocation. If you're going to, depending on the setup, if you're going to, go all in with one entry, or going to break your trades in multiple entries. So there's a lot of things to take into account, to put into notes in order to create a trading plan, around this. And at some point I kind of not gave up, but I got into a point where okay, it was a bit overwhelming and very, very confusing. And my best results was understanding what are for me like A setups, and B setups and C setups. A plus setups, the best setups I want to take, and less setups. And according to the quality of the setup, then the risk I would take, and then I would define, okay, for A setups, I would allocate a certain amount of risk. For low quality setups, certain amount of risk, and then the action plan, okay, the execution, how it's going to be for each setup. But no doubt that trading discretionary is it's more it's more complex to explain and to teach and to learn and to put into an actionable, straightforward action plan.
Yeah, no, I definitely, I think that's also the important distinction between discretionary trading and creating a system. So what I've seen through, when I'm trying to trade discretionary, it's I feel like I'm always looking for like I'm looking for a reason to take the trade, and so I'm looking at like technical levels. I can show you guys an idea that I'm working on with Euro USD right now. So I don't know if you guys are familiar with Tom Dante, Trader Dante. He's also a trading educator and quite big on Twitter. He's I believe he's the one who like first talked about the idea of the idea that you have a so let's take a look at this 1 minute chart on Euro USD. That's a breakdown candle, right? So on the 1 minute, we can all agree that this latest bearish candle, that's a breakdown candle. So and this is just simple stuff, right? And when you break this candle, when you break this level right here, this is obviously the last low. So we can call this the last low pre-break. And it's also a clean level because it's a thrust candle, and it's a clean level, and it's untested level. So the way I look at this is, and this is what I'm doing discretionary. So without adding all of these levels, I'm looking at this and I'm taking decisions based on this, but discretionary, right? So I don't really have to add the levels. But basically what I'm looking for is I'm looking for price to move down and then come back up and test this level right here. And then I'm looking to, if I'm going to have a tight stop loss, then I want to have the stop loss above the high pre-breakdown, which is that one right there. So the setup would look like this. And then I want to front run that level by putting my entry a little bit lower to make sure that I actually get filled. And then perhaps the next level below where I think price might run into resistance would be maybe that one right there, as support. Now, of course, we see Euro USD move way further down. So we can go to current price right now. We see that price has moved way further down, but it's actually have not tested that level as well. And I know, Saul, that you talk about clean levels as well, levels that have not been tested, right? You want to see or is this something that you look at in your analysis, clean levels, where there haven't been
Correct.
any retest of? And I think this is almost like universal in in trading and technical analysis. Every good trader understands the strength and the importance of a clean level. So when I'm working on, so right now, I'm doing this scalping here on EURUSD on the bootcamp challenge for these live streams, and so far I've been doing it completely discretionary. I'm basically just looking at a level, looking at resistance and asking myself, okay, so if price hits this resistance and there's a rejection, well, I want to go short. Now I'm trying to create a more of a systematic approach and applying these ideas like low pre breakdown and untested levels and things like that. And I think this is one of the approach you want to be using if you want to try to move from discretionary to systematic trading. I think that's actually a really good process to use when you're starting out. Maybe have more of a discretionary approach to kind of learn about the markets and with the way the markets move, and then try to build a system around that discretionary trading. So would you guys say that this is an approach that you would recommend, or would you look for start in the other way, start with a systematic approach and then perhaps move on to discretionary later?
I don't know. Shall I?
Yeah, Victor,
go.
that's on you.
Well, I think it goes with it depends on the personality, of course, because either way, it doesn't really matter if you start discretionary or a rule-based mechanical first. But of course, you need to do whatever that comes easier to you. In my opinion, I would start with a mechanical system first because it's easier. It doesn't depend on your discretion. Since at the beginning, when you're starting trading, you don't know everything. You don't know a lot. You're still learning. You don't know what each candle is, the what the tape means. You have some difficulties. You're limited in the way the information to interpret the information the price action is giving you. So it's much more easier for someone to start with a mechanical system, a rule-based system. But in order for you to have a rule-based system, you have to define every component of your trade plan. And that's what you're alluding to, Jonathan, where you have, discretionary. By discretion, you know what to look for. You have the rules in your head, but they're not defined as objective or as easily put into words where you can say, okay, this is rule number 1. I look for this. And rule number 2, I look for that. You do have that process, but it's something, much more. It is within you, in your mind, but it probably you that's why you call it discretion, because there isn't like one specific rule that you need to that you're applying. And I believe, and I'm a firm believer, that I prefer to start from a mechanical system. And I know mechanical systems are limited, because once you define something, it's very selective. Only that which is defined is going to be valid. Everything else, even though it looks very similar, if it doesn't suit, if it doesn't check all the boxes of the definition of each rule, it will be discarded, and I won't be trading that. But that's the price I pay, and what I get in return is that all my setups are homogeneous. They're the same kind of setups, because I have a specific rule that identify all of them, and I know for sure if I'm trading a signal, everything else I know I have it. It helps my confidence, because I know the H4 is exactly the way it should be, and the whatever steps that I have in my. But that's the trade-off that I have. And as I said, it makes you more selective, which is not always a good thing, because your trade frequency comes down. But it's good for your consistency for the long term. Then again, that's the way I am. But I would argue that starting with a mechanical system for a beginner is much more easier, since you only have to follow the rule, the system, which is rule based. If you and I teach this to the students that I teach. If your trade plan is rule based and is written correctly, your grandmother should be able to follow it.
Yeah.
A child,
I definitely,
a 10-year-old
I think,
child should be able to follow it.
Yeah, I mean, I definitely agree with you here. That systematic approach is something good. I would argue that though that for me, having a discretionary approach to begin with, I would actually argue that that would give you more knowledge and more experience of the markets and the way the markets move, and kind of like give you a test of your abilities in a much different ways than a systematic trading would allow. But if you do have a system, and a system that actually works quite well, I would say that that's the way to go. Before we continue, I want to show you guys this. So you all saw how this played out right now. So what I did here was I talked about the clean level, and that's the low. So that's the low that broke. Put a line on that low, front run that level a little bit, and then what I did is I marked out two different horizontal levels right here. I marked out that high as the 1 minute swing point. So I'm looking at this as the swing point and where the move originated that broke the level. That one right there. And the reason for doing that is usually when I see. So a lot of times when you have a clean level like this, you want to look at the 1 minute. It's a clean level on the 1 minute. There's no immediate retest right here before the breakout. So it's on the 1 minute. It's also on the 5 minute. It's also on the 15 minute clean. And it's also a clean level on the 1 hour. When you have a clean level that goes from the 1 minute and higher, it shows you that it's basically a more important clean level. And usually what happens is you will have a reaction. Almost every time you'll have a reaction. The question is, how strong is the reaction going to be, and how far down are you going in this example when shorting? So two things that I'm testing right now is if you enter, for example, on the 1 minute, do you want to have your stop loss as at the 1 minute swing point, or as I marked out here, a 5 minute swing point up here? So you can, I'm going to experiment with this. You can place the stop loss here or up here. Both of these trades, I guess placing it up here wouldn't probably be any favorable risk to reward, but it's an interesting way where you can try to take something that is discretionary, like the way I'm trading right now, and then look for patterns on all the trades. So let's say you've taken 50 trades with a discretionary approach, but what if you see that, wait a minute, every time I enter a trade, it's on a clean level. So now only enter trades on clean levels. And then maybe you see that every time you have a test of a clean level, there's as an example, a bearish engulfing candle. And if you see that on most of the winners, there's these aligns, then that's how you can start building a systematic approach from a discretionary system. So yeah, that's just and it's pretty cool that we actually did have a perfect example of this on the live stream, where it actually hit the entry and it hit the TP right here live. And this is a good example of a way of trading that can be traded on all time frames. It's basically a break and a retest by marking out clean levels and then having the stop loss around above the last swing point pre-break.
I think this user is making a valid point, where I said I like to start mechanical first, and then maybe later be more discretionary. And you say you prefer starting discretionary and then build the rules based on your discretion. And this user is making a point, I believe, because that discussion, whether you do it mechanical or rule based, discretion, it doesn't have to be the complete plan. You can have sections that are one or the other, right? Either the setup, or maybe how you get to your bias can be mechanical, but your entries are more discretionary, or the other way around. Your setup may be more discretion, but your actual entry isn't, right? It's much more mechanical. So I think that's a very good argument, or a good point being made there. Another thing I think is it may be a good tip for everyone who wants to build a system. Find out what the rules are of your discretionary trade is. One of the things that I've done, and I think it's very helpful for anyone, is identify the setups that you normally take, right? By discretion. Have a good number of them, right? I don't know, 50, 40, whatever number you can. But watch them visually before the entry and see, try to reverse engineer, right? You don't have the rules yet, but try to reverse engineer, and you um, try to reverse engineer to see what would have been a rule that would have made you take this trade. And so it's you already took it without having any rule to take it, perhaps, and it's not rule based, it's not mechanical, but what rule would have made you identify this as a valid trade? And you have to be creative in this case, of course. And then the game, or I call it a game, but then the process begins where you try to see what is the common denominator of the winners and what are the common denominators of the losers. And there, once you can identify certain rule that are more likely than not be winners, and the other way around, there you have filters or rules that you can incorporate in a mechanical system. And and you can start from discretionary. It doesn't have to be starting from mechanical necessarily. If you do that, you are incorporating objective rules that are easy to follow, and may start forming your um, may start more forming or moving you towards a more mechanical system. Even if you don't move completely to a mechanical system, it will serve any trader to have as much as possible being mechanical, because it will bring consistency, it will free up mind, because with a discretionary trading, you need to be very, very focused, because it depends on you. But if it's mechanical, you're just following the rule. You're just waiting for that phenomenon, that event to happen, that closure of that bar, or that candlestick combination, or whatever it is that you're looking for to happen, and then you just act. Right? You don't have to interpret anything yet anymore, because it's already part of your trade plan. So it makes sense, at least in my mind, to incorporate as much as possible, even if you're a discretionary trader, as much as possible, build them or transition into some kind of a rule-based system.
Yeah. No, I mean, yeah, of course, I'm absolutely with you with that. Having a systematic approach is definitely the way to go. And I mean, I think one of the reasons why what I'm doing right now, at least from an entry trigger point of view, is the reason why I have more of a discretionary approach right now is because I'm trying to build more of a systematic approach around it. And I feel like that's, and we talked we talked about this in the beginning of the live stream as well. What, how can I find the best, going through my journal, looking at the best trades and what do they have in common. So I mean, one thing that I'm doing is I think I have to switch to trading view for this, because trading views is much better when it comes to actually showing things. So we can look at, for example, we can look at, so what I do is I have a high time frame level here. So let's say that this is a weekly, daily level or weekly, and then I see price, coming down into this level on the daily, and that's where I go into the 4-hour and I look for basically a structure like this. And these are what my best setups look like. I enter on that break and retest, and then I have stops below the level, and I try to exit at perhaps that high, and it's usually half an hour to 1 hour. So the whole idea is quite simple, because usually what we see is that level, the best trades is when this level is a clean level. Okay, that's it's supposed to be a is the clean level. And when that's a clean level, I've seen that I have slightly higher win rate on these and higher success. So one way of making it more systematic would be to put an alert at the high time frame level, and when the high time frame level gets hit, I will have an alert, and then I simply look at I look at price action. If we have a high like that, I add another alert to tell me that there's a possible break and retest happening, and only put in orders if it's a clean level and if I can have stop loss below. So it's more about creating rules for the approach that I already have laid out discretionary. I think that kind of makes sense. Saul, I want to ask you, what are we looking at today? Trading. I'm personally watching Euro USD, but right now I'm looking to perhaps short a move I'm seeing here on the 5 minute. How about you?
I'm looking at dollar yen, and I'm also looking at Euro USD, and this is one of the days where I'm, based on experience, I should not be trading, because my analysis is not 100% clear, and I'm not super convinced of my bias. Let me maybe show my screen, and I'll tell you what I mean. Because I have the same bias for Euro USD and dollar yen, and they're supposed to be not non-correlated, opposite in direction. So one of my two readings is wrong, and I don't know which one is it. So when I have this kind of non-alignment between my analysis, I need to reduce the risk I take on each one of the setups, because I'm short bias on Euro USD, but also short bias on dollar yen. Now I'm taking just a quick a potential reversal on dollar yen, just in case we hold on that level, but my bias is still to the downside. So we'll see what happens, but I'll keep that minded, and remind myself that I need to maybe wait for new information from the market to show me which of my bias was the right one, and then I'll feel more comfortable jumping into the market, more aggressively. That's what I'm doing right now. Just giving you a quick analysis of dollar yen. My bias is still to the short size. To the short side, we're coming from a very strong impulse to the downside into this area, but we're not quite yet. And if we continue, going to the downside, we see there's strong movements to the downside. So I would rather be shorting this market, just going into lower time frame. So there was this, there's this level, and we've been kind of neutral. So I feel comfortable going both sides, both directions. But my bias is still to the downside. So that's what that's this. And Euro USD, we discussed this last time. That this is, we saw this area, and I talk about wanting to see something like this retest of this area. This is all marks from last week, and then the movement to the downside, and we're on that leg. So I believe this level is not going to hold this time, and we have the potential to continue lower on Euro USD. So I'm wrong on one of those. I'm just don't know which one.
Yeah, I have a solution for that problem. So when you have two pairs which are inversely correlated, and they're telling you the same direction, so one of them most likely is wrong, or it has to be wrong because they're
Yep.
inverse correlated. The thing, what I do is in such a way is that in such a situation is that I take both of them if I have a signal, and
Hmm.
since I trade a high risk reward ratio, if it's 1 to 5, let's say, on both of them, it doesn't matter which one is right, because I will lose one R on one side, and the other one will win whatever the profit is plus 5, let's say, and then I end up winning anyways.
Okay,
That's
that's a good
that's
one. Yeah.
that's my so you bet on both of them, but since you win much, in my case I win much more than I lose, it compensates for the other one. And that's the same thing I do with when I have a signal long while in a position short. Normally that doesn't make sense. It's only going to go one way, and I don't know which way is
Yep.
going to be right. So and I take both of them, and I know I'm going to be wrong on one of them, but that is okay. The winner will cover up for the loser in this case.
Okay, that's a good one. The only scenario is not very likely to happen that all movements across the board are, no, not even that. I was going to say that the euro and the yen are, doing different things, and there's two movers at the same time, and it's not related to to what the dollar is doing at the moment. And then there could be a correlation between euro USD and dollar yen, but that's very, doesn't happen a lot. So, but I'm just seeing, I'm just seeing how euro is dropping and dollar yen is also dropping. So right now is they are correlated in a sense.
Yeah, I can
Yeah,
definitely see how EU. I mean, I would say that we're at. I mean, like you showed, it kind of like it looks like we're at some type of support here. But then if you, I'm not like this second retest on the daily, it just looks very weak. We had a very strong reaction on the first retest, but then we're now having the second retest, and there's just no strength here. There's, no willingness to step in. The buyers are not really willing to defend this level, it seems, and we're dropping lower. I mean, it looks like we're going to break down on the daily. We're dropping lower on pretty much every time frame. I wanted to just quickly go over an update on the idea that I talked about. Remember that we looked at the 1 minute, and we talked about a clean level on the 1 minute, and this is on the 5 minute. And if I add a level right there on that wick, you see that breakdown candle, that's the wick, and then you go into the 1 minute, that's the actual level we looked at on the 1 minute. And if you go back to the 5 minute, if we add a horizontal level going straight through here, we can see that we have um, a horizontal level here. We can connect maybe those candle closes with those up here. And here we have a pretty decent break and retest. This was the swing high on the 5 minute we marked out. Now it hit that one. So if we would have entered on that level with a stops above this 4-hour swing point, maybe would have been stopped out here depending on the spreads. But you can clearly see that the overall structure of this move is a break and a retest of that level, and then a move lower. And if you really want to get good entries and you really want to try to pinpoint your entries, it's really going to be these clean levels right here that you want to be looking at, the immediate low pre breakdown. I think that's a very important concept to remember if you're going to be. And this works in all markets. It's so fascinating to see that it's these technical concepts work in basically across all markets. But looking at this, I think if EU wants to move lower, looking at this level on the 5 minute, we might have like a really good entry around this level. The only thing that's kind of holding me back is the fact that we got the wicks coming down and hitting support here. So it does look like there are actually buyers coming in here, as we can see from the wicks. There are some strength when we hit that level, but as soon as we break this level right here, I think that's time to move lower. And you can see how it's the second retest. This is the retest I talked about on the daily. where we had a very strong reaction right here. And then this is the second test right here. And I'm not really seeing any strength, and it looks likely to move lower. So I'm going to be putting in an alert right below this level. And when that alert goes off, I'm going to be looking at a basically break and retest of that level, just like we looked at right here. Would that be perhaps a trade that you guys would be looking to take as well? Or are you ready to be short this level right here?
Actually, I just got long EU. I follow your I follow your analysis, and I follow your bias, and I agree with you. I see the weakness. I see the lack of buyers coming in. But it so happens to be that it gives me what I need to see to go long, and it signaled me. So I got long. But I still think that that long is not going to be something that's going to take, it's going to drive for very long. It's going to probably be a pop and take some high before it continues, because I do see and agree with you that the easier path for euro dollar is to go lower.
Yeah, I mean, could also make the case that if this level gets reclaimed as support, we might look at this as some sort of range. So this could be.
I can maybe show my screen and show you
go ahead.
the reasoning why I got long and why I agree with you in principle. Let's see. I got, this is my, okay. So this is the idea. So if I see on the higher time frames, I recognize on the H2, I recognize a possible reversal pattern, which is this, right? It's not what I want to see completely, but it is enough for me. That's the break of the structure, and it comes back to retest something in this leg. And this is the last line of defense, and this is on the H2. That is one. On the H4, I don't see that the buyers, at least not in the way I interpret price action, I don't see that the buyers were very clear that they want to defend this on the H4. So on the H4, I didn't have any indication, and that is a prerequisite for my setup. So on the H2, I did have an area, which is this area that I want to see how price reacts to it. Let me see if I can identify. It's this order block, right? That's where we are on the H2. And what do we see on the H4? Even though we did not, we didn't have that indication on this higher time frame in the H4 that the buyers will be going to defend that area. We now did get it after not after the fact, but on the retest, we did get a bullish order block on the H4. So now I have that alignment that I needed. We had that H4 and the H2, which is based on the quasi. So now what I want to see is when price comes back into this area, I want to see it do some kind of reversal. And if it does that, then I want to be part of it. And that is one thing. But the fact is, when I go to the lower time frame and I see I don't see on the H1, for example, any indication where this is the only bullish order block that was formed. Other than that, we came in, no buying power. We have and the opposite, we had a bearish engulfing, and we're showing that again. So I see it's likely that my trade is not going to go to TP, but it doesn't matter. I know that these are the trades that since my win rate is lower than 50%, I know that I have a great chance of losing this trade, but that is okay. I need to be taking these because 1 in 3 gets it is actually a winner, and that is enough for me since my win rate is much higher. So, and I'm not targeting any structure way higher because of all of what you also see, that bearish order flow. I see that, I understand, and I think it's likely it will have an easier way going down. But if I go to the lower time frames, I can see how we form, right? Look at that pin bar, look at that engulfing. There has been some buying coming in, and if we consider this big handle, if we go to the lower time frames, right? You can see this reaction. Where does it happen? It happened in the same order block. I didn't mark it, but let me mark that. Let me mark that area. On the 5-minute, this is not a 5-minute signal, but this is the area where the buyers came in. So if I indicate that on the 5-minute, it's not an entry on the 5-minute, but it is an area on the 5-minute. And if I go to the lower time frame, that is the area where the buyers again came in and reacted favorably. So that's what I want to see. If the market is going to switch back to bullish, that is what's going to happen. And that is what is, although now it's already negated the whole move almost. So and it's okay if I got stopped out. I understand that my win rate is lower than 50%, so it will happen more often than not. But I need to take these setups because I just need 1 in 3, let's say, to happen, which is roughly my win rate. But my risk reward is almost 1 to 4, so it's going to compensate. Beyond will compensate. The winner will compensate for the 2 losers each 3 trades. And that is my idea. And it looks like I'm going to be taking a stop loss. I'm going to be stopped out.
Will you? What are you? How are you managing this trade? Are you, because you
I don't.
now
I
obviously
don't.
it looks. Oh, so you don't manage it at all. It's keep your stop loss.
Yes. In this
All right.
case,
Okay.
in this case, I have nothing to do. I just, everything that was dependent on me, I already did, which is get in, put in my stop, put my target, and if it gets one of them, I will notice when it closes. And
I think
I'm not supposed
looking
to
at
be
EU,
touching this.
looking at EU here on the lower time frames, what I see is price slowly moving to the upside, but really rapidly to the downside. And I think
Yes, I
that
see
to
that too.
me shows that it wants to break down. Like the sellers really are really powerful here. Like as soon as it hits, like it slowly but surely makes its way up, hits a level, and then boom, straight down. There's a lot of sellers coming in.
I agree.
So we'll see.
But
We'll
I
see
agree
what
with you
happens here. But
completely.
I definitely think I mean, I don't think anything's going to happen, but I do think we're about to break down. Saul, I wanted to ask you, when you're trading, you're usually you don't have a lot of you don't have multiple positions open at a time, right? You usually try to maybe 1 or 2 positions, right?
No, not exactly. I don't know. We can share my trade. It really depends on the setup and how many valid entry
Yeah, you
points.
have different. Yeah, okay.
Valid entry points I got. Here, for example, in this case, I only have this valid entry point. The next one would be all the way up here. So, and that's a large distance. You know, volatility is high on dollar yen, so that's a large distance. So I don't think I would like to hold these lower entries in open in case we break above this trading area. So I would kill those trades and then I would re-enter if necessary at the top of it. You know, I needed to you know, I got you know, I reminded myself I trade what I see and not what I think. So I just see the momentum to the downside. So that's why I'm sticking to that direction.
Nice.
We had this nice impulse to the downside, and then as we were going to the retracement and testing that area, I was opening those trades, and then one trade, and then when the market continued to the upside, I added more into that trade. So I had my first entry areas and my second entry areas. Maybe show you that. Okay, so that was the loss you saw before. So I needed to compensate for that loss. That I went long and I lost. But then I had these trades here and these trades here, and you know, I just saw the resolution of everything. You know, going into some of them to break even, some of them to take profit, and I think I'm balanced for the day. I don't think I've made a lot for today. But yeah, that's kind of the way I approach the markets, and again, I'm being very cautious because I'm not clear. You know, I see both bias both directions and both impulses on both my readings being correlated at the moment. So I'm being cautious because of that. At some point, momentum could come of one of them and just turn around completely, and I'll take the loss. So I'm just trading with caution.
Would you short? Would you short if we come back up into that area, or is that trade already done?
Yeah. So this area, I think this area is already like consumed. I think those tests are inside that area. I would wait and see how price behaves up here and then decide. And if it just breaks through, I would wait and see how it behaves up there and maybe look for some more confirmation before entering. But I will not jump, without confirmation, because again, I'm not clear on my bias.
Would there?
I go ahead.
What would you want to see to? Because right now you're, I guess, kind of biased to the downside a bit. But what would make you go long on this particular chart here on the 1 minute?
If I see a clear break of this level or this level, and if that break happens, very very strong, we saw together the price action down here, right? So we saw the attempt of breaking and the strong rejection of that, and that strong rejection might have some continuation to the upside. So breaking, what's the definition of a trend? It's just lower highs and lower lows. So when we start breaking those, if we start creating new highs, I need to be mindful of that this impulse to the downside might become, it's not a new trend, because we kind of, I don't know if from the 1 minute chart we're going to initiate a whole new trend that would apply, on the dailies as well. But at least on the current momentum to the downside, if we start seeing higher highs, and these old highs being broken, we might see the turn to the upside. But that just right now, my read stays with the bias to the downside.
All right, I think that sounds good. So yeah, basically, if you do see that the lower highs and lower lows are breaking, that's when you might want to go long, and perhaps up
reconsider.
and perhaps up to that level above where you might want to switch to short again, right?
Correct.
Right. All right, Saul. I know that you're very busy. You're tight on. You get a very tight schedule today, so I'm probably gonna have to let you go.
Yeah, I will. Sorry, I'm staying short. I just need to go to go to some meetings soon, so I need to get ready for that. But it was a fun session. I couldn't show you the whole setup, but maybe hopefully next week.
Yeah, that's the thing. You gotta follow. Like if you have that's I think that's one of the biggest mistakes a lot of traders do as well. They when they don't have a good read, they're supposed to just take it easy, and not trade. But I think a lot of people come in and they trade anyway because they think like they're supposed to trade every day. So I think it's a good example as well. If the market is boring, there's not a lot to do.
Yeah,
So
but if we just keep an eye open, if we do break this level down there, I don't see a lot. We have that support. We've been, this is an area of interest, and we are there, and that's where we see all those reactions. But if we do manage to break that with enough momentum, we might find ourselves all the way down there. So there might be some opportunities down there.
All right. Great stuff, Saul. Maybe we can catch up next week and we can update on the trades that we looked at today in the market, see how it evolves.
Sure, we will.
All right, man.
So I enjoyed this time with you, although I didn't ask you that many questions this time. It is because, of course, I was occupied with my trade. But I think what you mentioned before you go, what you mentioned is a sign that others should look for in an experienced trader. The fact that you can understand that you know that this time, this moment isn't showing what you should be looking, you should be finding to trade, and you're aware of that.
Yep.
You know that something is not right today for your system. Doesn't matter what kind of system it is, but you can recognize that, and that self-awareness, you're acting upon it in the sense that you don't just come to trade just because you want to, but the market isn't offering you the opportunity that you're supposed to be getting. And I think that's a very important lesson for everyone. If something is not right, perhaps the best thing is to sit on your hand and wait for the moment, wait for the market to come to your levels, and then you act. Don't chase the market.
Absolutely. As the market gives you new information each candle, I see the confidence. It's like a pendulum, and sometimes you're very, very confident in the setup, and sometimes it's confidence is not at the top, and sometimes it's very clear why, and sometimes you're just not sure why, but just because you've seen something too many times, your brain is telling you, okay, something is missing, something is not right here. So sometimes you're aware of that, and sometimes it's like a blind spot that you're not getting. But yeah, definitely today, my confidence balance is not very, very confident. I feel like markets around to one of the markets around to turn, and I'm not sure which one and in what direction. So I need to to stay cautious.
Yeah, I think it's a great example of that goes to show that you know the market. You know that there is a moment to trade and a moment not to trade.
Correct.
Yeah, great stuff.
All right, guys. Thanks for having me.
Thank you, Saul.
We'll
See you
meet next time, and see you guys, see you traders. Bye bye.
Yes.
Thank
See
you.
you. All right, there we go. Victor, I'm gonna take a quick break. Maybe you could
Sure.
we could ask the viewers if they have any short requests, maybe gold or anything like that, and you could perhaps break it down. And I'll take a quick break, and I will be back soon in a couple of minutes. All right.
For sure. Take your time. No
Perfect.
problem. All right. So, as Jonathan said, is there anyone who wants me to look at the chart? Any specific trades, or asset that I should be looking for? I have currently the EU, and it has all the signs that it's going to take me out, and that is okay. That is I try to be as detached as possible of the result of each individual trades, because I have no control of that. The only control I have is in identifying the setup and acting upon the signal. That is where my control stops. That's the part that I can control. Anything that happens after I enter is out of my control, right? And it looks like it's going to be stopping me out any moment now. I was expecting it a little earlier. The reason that I know that it's likely to stop me out is because this impulsive move didn't get a follow through. Right? It can come back normally when I take these trades. It can come back, but it needs to respect this order block, and it is right there. See, this order block should be respected. It shouldn't be going much lower than this order block, right? So, and it is, as you can see, we can see on the wicks how many times it is violating or it is squeezing that order block, and the more time it does that, the more likely it is then to go the other way, right? But my job is not to intervene, because that's what I measure in my data. I just need to let them go, and they will do whatever. If it go to stop loss, that's fine, that's a sign. And if it goes to TP, great. And if not, then it's fine. So in the meantime, I'll check the chat to see if who wants me to, what asset should we be analyzing together. Let's see. We have a couple. We have gold, silver, euro, NZD. But I think I'll leave Euro NZD for Jonathan, because he's been trading Euro NZD for a couple of trades lately. So I think maybe it'll be interesting to see how his trades have been reacting. Uh, there's someone here asking me if I trade full time. Yes, I am. I'm a full time trader, a full time funded trader. So yes, that is correct. As you can see, guys, we're not. I'm not going to leave. We can go analyze gold or any other asset in the meantime. However, you can see that this area is important for the market, right? You can see how many times it is spending there. The all the times, right? All the times that it has a bearish impulsive move, right? They stop each time a little bit lower, but they're roughly in this place is where they are slow down and maybe they will reverse, right? That's the whole idea. um and we are currently seeing some kind of reaction. We'll come back to this trade in a couple of minutes. In the meantime, let's see, we have a question before we go to gold. The question is, I'm able to get 20R trades like 1 minute entry for a 4H trend, but with a lower win rate, around 20%. That's why my execution is weak. What do you recommend? Well, I recognize this, what you're describing, because it's very similar to how I trade. I have a low win rate, right? I lose more often than I win. And also I use the H4 and other higher time frame as well for my bias, for my setup, but my entries are on the 1 minutes, the 2, the 3, the 5 minutes time frame. So I recognize this completely. And even 20R is something common to me, or at least not infrequent, I would say. It's not something that I get every day, but it's something that I get quite often. So I understand this very, very well, Hamid. This question. You say your execution is weak. I'm not sure I know what you mean by that. If you mean that you don't know exactly where to enter or and where to put your stops, if it means maybe that you don't feel confident when you enter, you have a lot of doubts, a lot of fear, um, because the thing is, and that comes back to what we talked about at the beginning of the stream, right? That discussion about whether you should start with the discretionary way or a mechanical way first. um, for my way of trading, I have the same issues, Hamid, where I need I need to have something to hold on to. And a discretionary trading discretionary system, when you are, with a low win rate and on the 1 minute, which is relatively very fast, it's easy to be in doubt. It's easy to feel fearful of, market taking you out, right? You can see that in the same area where I got in, right? After I entered, my entry was in this leg, right? That in that leg was my entry, right? So my entry isn't here. My entry was actually way before. You see how many times it has come back. And if I were fearful, I would have closed this long time ago. If I were trading discretionary, I would have closed this almost certainly, right? Because it's showing you for many bars that you are, it's showing you you're wrong. It's telling you, even though it hasn't taken me out yet, it's telling me you're wrong. I'm so close to, even watch this. It's been so close to my stop. It hasn't taken me out. You know, at this point, you're completely convinced that this is going to stop you out, right? So, and that's the issue that I have, me too, with a discretionary system, because it depends on your fear level, your emotion. Now it looks like it's going to stop me out, but that's beside the point. The point is that if you are relying on a discretionary way of trading, it can be very difficult in certain aspects depending on your system. In my case, it is holding through this. This is painful for anyone who, if you got here and it moves in your direction but then comes back and is telling you that it's not going to react and continue up as you would have expected, right? And if so, that's the reason that I hold on to a mechanical system, right, where it doesn't depend on my fear level. It doesn't depend on me, because the only thing I have to do is enter and let go of it. And that's not easy. It's still hard, but that's it. And that's my recommendation for you, is to, if you, and I still don't know what you mean by your execution is weak, but whatever it is, you can enforce your execution by looking for rules, right? Convert your system into a rule-based system. Even if you don't convert everything, at least your execution, if you do that and you're able to identify, certain things you need to see for you to enter, and that's you're going to be your signal, and you're only going to be taking that signal when you can let go of the trade, right? Get out of that illusion that it depends on your intervention. It doesn't depend on you anymore. Everything you did, that's your job. Your job ends with your entry. Put in your stop loss and TP and let go of it. The market will, it's a game of probability. The market will tell you, will, go to wherever it's supposed to go. And that's my best advice, I think, for your situation. I see there we have some people responding to Hamid. Yeah, that's another thing. I think this is great, guys. With these Misha is asking, or is telling us, is asking Hamid, does it fit your psychology? Yeah, right. To have a low win rate, because it is a thing, right? You have to match the win rate with your psychology. Are you able to hold on a trade, be wrong, take it again later today or tomorrow, be wrong again, and keep on having losing? Because with a 20% win rate, your losing streaks are going to be considerable, right? It's just a matter of probabilities. If you lose 4 out of 5, which is the 20% win rate, it's very easy to have long losing streak, and that's very difficult to be able to withstand without losing composure, without doing things you shouldn't be doing, like moving your stop loss, or getting out of the trade just because it hasn't produced the results you expected. So I think that's a great thing here. Let's see. There's another one. Misha also tells something. I like Misha a lot. See, Misha is telling something here. Said, how do you determine if the losing trades you took is part of the plan, or your mind playing tricks on you? Is it completely mechanical system, or you use a discretion? Of course, these questions are they are directed to Hamid, but I think these are good questions to be asking you. And not only that, this shows that when you're in the heat of the moment, right? We as humans, we tend to not be great decision takers, right? Because you have pressure, you have stress, you have fear, emotions are running high. That's not your best moment. Your best moment to make decision is when you're relaxed, when you're not rushed, and you can see things clearly from a comfortable distance, not when you're in the trade. That's why I have some discretionary decision that I take, but I try to minimize them as much as possible, because I know from experience that my discretionary trading isn't that great. I need to stick my mechanical, and I know with time, I know that a couple of things that I can do discretionary are positive for my bottom line, but it's not a free for all. I cannot just go and trade everything that I see because I think it's going to go to hit. It's a good trade, because I think, without having some kind of a mechanical framework to support my idea. Well, this trade is going eventually is going the right way. So let's see what it's going to do.
Yeah, that's looking good. I like that. Looks very good. Looks like we're holding that support nicely, and it also looks like we're reclaiming that level I talked about. So if price can uh, close up. So on your shot, it's the last swing high on the 1 minute right there. If
Yeah.
it can reclaim that level, basically the level that it's trading at right now, then I think you're quite safe. Then you have a lot of support below you as a kind of like a buffer before hitting that stop loss. So yeah, I think definitely an interesting trade. I can't find. Yeah, I can't find. Oh shit! I closed the trade I had open on Euro GBP, which is now well into profits. I've made. I took two trades this week, and I don't know. I feel like feeling kind of out of sync this week. You know, I feel like it's took two trades, but maybe maybe one of them. Well, no, actually, I took three trades. One on Bitcoin as well, and I think the one on Bitcoin is really the only one that I feel is a good trade. And
Okay.
I've been having, I've been having this issue for the last couple of weeks, and I've been thinking that okay, so there are quite a few trades. Some of my losers could have been, I could have not taken those trades if I had a more more strict strict rules with the setups I'm taking. On the other hand, what I also need to test is how many of my winners would have been gone if I follow the same structure. So it's easy to look at the losers and say like, oh, these are losers because of that, but maybe some of the winners are also winners because of the same reasons,
Yes,
So
I understand that.
it's important to not only focus on your winners, but also focus. Not only focus on the losers, because you might have a lot of winners with the same approach, and just because it's losing trades doesn't mean it's bad trades. So like it's when it comes to refining your edge, there's a lot of work, and I think one of the biggest issue or the biggest problems that at least I faced in the beginning was understanding what to actually look for, like get ideas on what do I need to test, what should I look for, I think that's difficult. I think one very good thing that most trading journals have out there, it's the I can't remember what it stands for, and I can't pronounce it, but it's MEI, or right?
MAE, maximum adverse excursion, or
Yes,
or or
exactly.
the or favorable excursion. Which one of the two?
I guess they're both equally as important, I would say. Basically, what that is, most of you watching already knows what that is. It's basically you measure how far did price move against you versus how
Yeah,
far did
adverse.
price move in your favor as well. That, and then also tracking, like I have an edge one, you can track the idea of if your original take profit target got hit. So that's a really good function, because if you add the actually, let me see if I can go into my journal. I'll actually look at
Uh,
that.
Okay. There was something you said when Saul was with us yeah, on the show that I wanted to tap into, because it's exactly my thoughts when I enter trades like these. Um, you said, Jonathan, that everything looks like it's a short, and there are all the signs, and I agree with you that there are so many signs telling us that it's weak. It's going to most likely to break down and continue lower. So you're looking for that short, and I see all of that as well, even with order blocks, with the sellers seller's outside bar. So it's telling me that it wants to go lower, and it's likely to go lower. So um, I see that. However, everyone is seeing that. We see that.
Yeah.
You see that. That means that everyone isn't expecting a move up. We are the trade going down is going to be a little bit crowded because everyone is agreeing on one side. What happens if it shoots up and start getting stopping people out who are short? And you will see if everyone is one side of the trade, it can have impulsive move in the opposite direction, and that's exactly the kind of movement that I exploit when I take trades that are valid entries, but they are, the price action is against me, and it's okay when it loses, because I when I see that, I would say, okay, it already told me that it's going to be a loser. However, I only need to take win one out of four, one out of three, and have the typical risk reward ratio that I have, and it's going to be okay. I know I have a positive expectancy with it doing it, but it's exactly that that obviousness that you mentioned that I think is what makes it work those times, in the minority of the times that it does actually work for me.
Yeah,
It's
and
it
that's
you
also
know
why you want confirmation and it's support. Like when you have a what I you look at a support level and everything's just bearish, but you're still at support. You have to remember that support is support until broken, and
Mhm.
until confirm, until you can find confirmation of support actually being broken, then it's still support. So um, you shouldn't, like with the idea that I had saying that, okay, EU looks very bearish, but I'm not going to short it because I need to actually see the break lower. I need to see a confirmed break lower before I actually short it. Um, and with that, also with that logic, you could also develop a system around, buying support when it looks like it wants to break, because a lot of times you see that you'll have strong moves because a lot of people are piling up and like shorting. There's a lot of liquidity there, but a lot of people wants to short that level, and that's
Yeah,
also where you might have lots of liquidity for people actually wanting to buy that level.
it's a saying, right? The obvious trade usually isn't the greatest trade, right? Because
Well,
I mean, the obvious in the sense that when something is looks, it's going to break, it's going to break, everyone is seeing
yeah,
that. Usually, there's some kind of a false movement, and it may later on continue that way. But if it's very obvious that it's going to everyone is expecting something, a lot of the times it will trick you before it actually does whichever you think it's going to do. That's
yeah,
that's my that's what I've seen many times.
yeah. It's
But
almost
I was
like,
going to go ahead.
yeah, it's sort of like with a range, when the range is obvious, that's usually when it breaks.
Exactly. Exactly.
Yeah,
I'm
you were gonna show something, I think.
yeah. I before you left, I was or while you were away, I was going to show gold, which I didn't yet. So if you don't mind, then I can look at gold, because I think we had a number of and
Sure.
we have a number of users and people in the audience asking for gold. So let's look at that. And by the way, there was someone asking for Euro NZD, and I thought, you being the trader who trades Euro NZD a lot lately, would be adequate or indicated to do that. Let's see.
Definitely.
On the monthly, it's very, very bullish. No question about that. There's nothing bearish about this. It's very impulsive. So we need to, if you see this, it should trickle down to, if you're going to take a short on gold, it better be something very short, because you're very likely to be stopped out if you leave it for a long time. All right. So what else do we see? If we go one step lower, we have an impulsive move, right? And we have some consolidation. That's obvious, nothing fancy here. And then we have a continuation, right? After that consolidation. We are, and this is the weekly. So, and it's been very, very nice in its way, forming bullish weekly order blocks on top of each other. This one on top, well, this one on top of that one, telling us that the buyers are firmly in control. And there have been in the past, in the last couple of months, and they're still firmly in control. There is, however, a bearish order block on the weekly that was formed right in this candle, right? These two when it engulfed. So there is a supply zone, right? Based on that, you can expect some kind of reaction of price. Going to, oh, I can't take that. Let me just leave it at, there is a area here where you can expect some kind of movement, maybe not very prolonged, as I said, because of the higher time frame and the bullishness of price action. But I wouldn't be surprised if there is some kind of rejection to it before it actually continues because of that order block. Other than that, I don't see anything else. And this candle, you'll see, okay, but there's an engulfing here as well, right? Why don't I mark that? And the reason is it's a moving candle. We don't know if will end up as an engulfing in the end of this week. So we'll have to wait for that. We'll have to be patient for that. If we go lower time frame on the daily, what do we see? Okay, so let's see. We had a bullish order block on the daily that we had it took quite its time to move out of it, but it's doing its job as the daily. So that's the bullish daily order block doing its job, and it looks like it's regaining that bullishness again, that bullish structure, bullish market structure, and it makes a lot of sense, right? It forms the engulfing here, right, and then comes back to that order block, and it did need many bars. So that's maybe a little sign that price is decelerating a little bit because it takes the retest are taking longer than usual, longer than before. That is something you can read in price action. The other thing is we are getting into a tight area, right? We have the weekly that I just mentioned, and we are getting that bullish order block on the daily, a lower time frame, but still a daily is right there. They're even overlapping. So you can, when we have order blocks overlapping each other, what you can see is that market tend to go sideways for some time before it decides if it actually wants to break out one way or the other. So it can be a little tricky to trade this when you see order blocks overlapping each other. And actually you can see it on the chart as well. It without on top of that bullish structure, it's forming bearish structures, right? That is indicative of the same thing, right? It's being compressed in a consolidation range, in where the both side of the market haven't decided yet if this is going to go one way or the other. That's the tug of war that is happening right now. So what can we say? Well, I would say that the long from this area looks very good because it is in alignment with the higher time frame. It looks like eventually it will break it, and we do have an area where it bounced off from. So I would be looking for an entry, a reversal pattern from this area. So that could have been, I didn't see anything here on this side on the H4. I do not see any structures here that I can trade, but we can do the same with this one. Let's see. We can have, let me put it this way, like that. And this would be then the established downtrend, and we take out the neckline, and it did come back, but I don't see any structures that I can take. So on the H4, it's not giving me, picture perfect indication of where it can go. This order block, for example, that I indicated, it did come back, but it invalidated it. So that doesn't count. What else? And the neckline would be here. This will be the neckline on the H4. And I would want to, if I were trading this, I would want to find something below that 50% retracement to that will be reacted upon. That's the area that I had. It did not respect it, and it didn't trigger me as well. So there, I wouldn't be in this trade. But that makes sense to me. That from here, it looks like it's reversing, going to the upside. If that is the case, then maybe on another time frame we might find something interesting. And yes, there is. I see one on the H4, on the H2, sorry, and there is actually an overlapping structure. So all of that could have been, of course, that already happened. But if you recognize what it's doing, even if you can't trade the setup anymore because it's already triggered, at least it will give you an idea. Okay, where we're likely to be going. As we go forward. So that is something, what I see here is a bullish reversal pattern on the H2, H4 without an entry on within the daily order block. That's one clear price action that I'm looking at. And if you look for the sellers, right? If you look for the other scenario, because we do have a weekly order block here. So if you go, do we have a daily reason? Let me go to the weekly first. And let's assess that from the seller's point of view, right? We have a seller, a bearish weekly order block, which was formed here, right, with these two candles. And this is the immediate retest. And we are basically in the same area still. We're still in the immediate retest. We haven't left the order block. So let's see on the lower time frame if we have a reason to short this. 1, 2, 3, 4. Actually, we do, and that is this order block. That's for the short scenario, which I'm not too eager to take because of the the weekly and the monthly being so bullish. But if you were to look for that short entry, it would be within this area, right, on the daily. And if we go to the H4, what do we find in there? Actually, maybe let's make it a little bit more clear by indicating it by some yellow lines, so we don't get people confused. I have so many lines in there. Let's see. This is one, and the other one is this one. There you go. Let's go to the H4. So within this area, I'm looking for that reversal pattern, if it is going to happen. And I don't see it on the H4. Let's see. No, I don't see it. I don't see it. So it's... no, I don't see it. And if that's the case, then because what I would like to see is a reversal pattern, like so, where it would go the other way, aligned with the daily and the weekly, etc. But I don't see that here. To me, that's not a quasi. So I wouldn't be trading it for the short. Maybe later it will form that reversal, but I don't see that. But in any case, I think if we can find a retest to this order block, or perhaps some other structure on its way up, you can tag along and go with the direction that the price action is indicating, which is the bullish reversal, or a inverse head and shoulder, or an inverse quasi, whatever you want to call it. But it looks like it wants to break out to the upside. That's for me on gold.
Victor, I have a question. When you're adding I'm not sure if you do this automatically or if it's manual, but when you're adding the highest price and the lowest price of your trade, are you doing that for the duration of the trade, right? It has to be for the duration of the trade, or does it involve price action?
I'm not sure I get what your question is. What do you mean by the higher time frame? You mean how I identify this order block as a daily?
No. I'm talking about something completely different. I'm not talking about your analysis on gold here. I'm talking about the MAE and MFE. So
okay.
when you're adding the highest price and the lowest price for that trade, or if it's calculated automatically, I know that you're using my FX book, right?
Yes.
And it calculates those prices for the duration of the trade, right? And it doesn't matter if the original stop loss or original TP gets hit, right?
Yes. The on my FX book, it calculates it while the trade is still open. So if you close it either by stop loss or TP, then it stops recording so far it has gone in your favor or against you. So it's while the trade is still open. However, in order for my FX book to record the max adverse excursion and max favorable excursion, they have to be. Well, actually, I don't know how they do it, but what I've noticed is that it's not very accurate. So I don't use them on my FX book. I like to see it because it doesn't cost me any effort. But if I really want to know the exact number, I calculate it myself.
So okay, so because I've started adding all of this in Edgewonk, and I have to do it manually, so it's taking a bit time. And the way I do it is, if I exit the trade, let's say I exit the trade at a loss before stop loss gets hit, that's going to be the lowest price if it's the lowest price of the duration of the trade. But what if the next day my original stop loss gets hit?
I think you're hitting on something very, very crucial for everyone to listen to. I think the first decision you need to make is: are you going to intervene or not? Are you going to be having a exit mechanism where you actively close positions while they haven't hit the stop loss and TP yet? If that is the case, then of course you need to measure the maximum adverse and favorable excursion based of the time between the time you enter and the time you get such a signal, such an exit signal, because that's the relevant data for you, because you're going to be out. You decided already that you want to be out with that exit signal. So it doesn't make sense to be measuring anything that happens after that, because that's why you have an exit signal, to get out of the trade. However, that exit signal is something variable in time, because as you learn more, you may let go of that rule. You may adjust that rule. And if you're adjusting that rule, then everything that you've done in the past, you can throw it in the bin, because it doesn't apply to the new exit signal, or it doesn't apply. If you understand what I mean, you're bringing in some.
You basically need to be consistent with not only your trading but also gathering statistics.
So the best thing to do is to measure no intervention, because that is something, your stop, your TP. And there's another question you have to ask, but that's the best, because that doesn't change. Now you have the basis of no intervention. So you either stop loss or TP, and then you overlay. So you do it twice. You overlay your current exit strategy, exit signal, and you measure each time, all the time, until you forever, if your exit signal is better than no intervention. Because the moment it is no better, why are we then closing it? We shouldn't be closing it, right? The only a valid reason for the justification for such a rule is that it is better than not intervening. That's the only valid reason for us to use an exit strategy. But if it's no longer that, then we shouldn't be intervening at all. And and that's even better when you just TP and stop loss. You can walk away, because you have your statistics on your side telling you that this is the best way to manage the trade, not touching it. So I would say.
I'm just gonna say, like, I have a notebook here, and in this notebook I write down all ideas that I get that needs to be tested, because, like, we can't implement anything in our trading unless we've tested it a lot and we know that it's something that statistically improves our edge. So while having this conversation, I'm also writing down some things that I need to test with the trades I currently have. And I just got this idea, and I'm not sure why I haven't tested this before, but I guess now that I have a decent number, I can start testing it. But I need to I need to make sure that I test my trade management efficiency here. And I think I don't really need to test it, because in Edgewonk I have the OTP option, original take profit. So what happens is, if my original TP gets hit, I select that, and then if Edgewonk see that I have exited before the original TP, and then that TP gets hit, that means on that particular trade, my trade management efficiency is worse than my actual results, and that's going to show. But I'm also wondering. I'm also wondering why there's no way. Maybe maybe it's not necessary, but shouldn't we also test it in reverse with stop
Yes, I
loss?
understand
You
that.
know?
Yes, I think the OTP is a one-sided metric. It is very good,
Yeah,
but it's telling us, if I understood you correctly, it's only telling us the winners that you didn't let run. But the thing is, when you apply that and you selectively only look at the winners that you didn't get, you're only getting half of the story, because when you are exit, you have an active exit management, right? You are also avoiding losers, and you need, in order, your P&L doesn't look at winners only. You got to be looking at both of them for a P&L to make sense. So you
I
if
think
you're
we
going
need
to,
to. I think we need to invite Rolf on here again. Um,
if you're going to measure any rule on your system, how it performs, and I know it makes sense to, see how many winners it gives you, but that's going to come at a cost, or at an effect on the losers as well. So you have to measure the effect it has on all your trades, winners and losers. Is it maybe it's giving you more winners, but what if it's giving you more losers as well? Right, and
yeah,
that's why we use the P&L for that, and expectancy, because the expectancy and the P&L, of course, are is the sum of both of them, obviously. So yes, the OTP is very good, but I think you need something as well. How many losses did your exit rule avoided, because that will be the opposite of the OTP.
yeah.
So yeah, maybe there is that feature, or I'm not
No,
sure. But
I think we have to. Well, I think we have to invite Rolf on here again, and he's the founder of Edgewonk. We'll invite him, and we'll go through this. And now I have 30 trades in the journal, and
mhm,
pretty cool that I just got a notification that says you've now journaled 30 trades. This is your first sample size, and then it gives me a link to a review guide. So I think that's pretty cool. Maybe we can get him on
nice.
and go through that, because I do think that uh, if you guys have a journal like Edgewonk or TradeSella, or there's a few other journals out there, if you have a journal, you get to understand that it's within that journal is if you're not profitable yet. Okay, if you're not profitable yet, your profitability is most likely in the data in that journal. If you had a somewhat consistent approach, I think you have your profitability, somewhere tucked away in that journal. And it things like just measuring, like I did, you just measuring the difference in result with different take profit targets. Or maybe you can just have ideas, ask yourself, what if I cut my stop loss in half, or what if I double my stop loss? What's the difference in profitability? Maybe you'll see that, oh wow, the win rate is much higher. I'm much more profitable having a wider stop loss, something like that. I think it's really key to really dive into your journal. Very, very important.
Of
I'm
course.
hearing that people are writing that gold is
Pumping.
pumping. Is it pumping?
Let's look at that.
Pumping. I guess that's a Do
I
have a
see
pretty
some
good
impulsive
breakout though.
movements. Yeah.
Pretty
But the
decent
thing
breakout
is,
here.
it's coming back at the order block that was created at NFP. So
Yeah.
that's the significant thing here. This is on the H1, but you can see this more clearly on the H4, right? The order block on the H4 is this, that it was created on NFP. So although it isn't a valid entry order block for me on the H4, I know that this order block, which was NFP created and it's an outside bar, I know that there is a good chance that we will have some kind of reaction from it when we get there. So I mean, it's very difficult for price to do this in one shot. It's likely to have some kind of reaction, and perhaps on the second or maybe on the third one, it gets breaking because I actually think it's going to break it because of the daily, the weekly, the monthly, etc. at some point. But because of that order block there, it's likely that we will have some kind of reaction from it. So yeah, but I do like how it's moving currently. Look at that big candle. That's a very nice candle there. So it looks like it's making its way up, um, and likely break at some point, right? Because you see, if we have on the 4 hour, what I said is okay. So there were some sellers coming in from NFP, but you can see that those sellers were not able to take out the previous low. What does that tell you, right? They sold this, but they weren't able to break that low. So they made a potential, because this hasn't taken this. It's not a higher low yet, until it breaks this high. But so far, it looks like they weren't able to control the market, the sellers, that is, on this time frame, meaning it's going to go the other way. Likely it might likely going to break out in the near future. I don't know how. No, nothing is certain, but I was looking into this as you were
Hey, can I
talking,
just before
as I
before we
was.
go into before we go into GU there, let me just
Okay.
I just want to comment this.
Okay.
Say something about this comment right here. So, okay, so trading. If you want, like, if you want to become a profitable trader, a professional profitable trader, the first thing you have to do is come up with an idea of a trading strategy. Okay, so you need an idea, then you need to test that idea, and if you do see any type of edge or any positive expectancy with that idea, you start working on that idea and you start adding things like, take profit and stop loss placement and all of that. And then when you have an idea, you demo trade that for, I'd say, a couple of months. And if you're profitable doing that, then you go into a live account. Now, if you follow that process, based on the rules of that system, if you should close your gold sell or not. If you have a stop loss and your idea is to let the trade either go to TP or stop loss, then this question is something that you shouldn't have to ask. The reason, I think that the reason that you're asking this question is because you don't have a structure, you don't have a system, you don't have rules to follow. Because then otherwise you would already have known if you should have sold gold or not. So and I see this quite a lot. I see people asking me, like, should I buy this? Should I sell that? Should I buy Bitcoin? Should I sell Bitcoin? Like, my answer to that is, you're not taking this seriously enough. Okay. You need to put in the work. You need to put in the effort. You need to develop a system. Okay. This is the reality of trading. This is one of the most complicated, difficult things that you're ever going to try to master in your life. Okay. Do not follow other traders. We had another question here in a couple, like before I went on a break, said, you trade two different systems. Are you ever being influenced by each other? No, I trade my system, and that's the system I'm trading. Victor trades his system, and that's the system he's trading. If I would be influenced by Victor, then I would not be cut out to be a professional trader. That's the true nature of this. Now, I can look at Victor and I can say, that's interesting, because you know what? I'm going to fade you on this, because my system tells me so. And Victor could be showing the greatest analysis, and he could say, and I could say, you know what? I 100% agree with your analysis, but I'm not going to trade it because that's not my system. Because I know that even though I'm wrong on this trade, we have Victor has like a 30% win rate. I have a 70% win rate. Victor has a risk to reward ratio that's like on some trades like 10, 15, even 20. And I have 0.5, you know? So it just makes no sense. It makes no sense to follow each other. So guys, like if you cannot develop a system, do not enter a trade. That's it's as simple as it is. If you don't have a system, don't trade, you know? And that's what we've been doing in these live streams for the last couple of months. We've been really trying to help you guys develop a basis for a system. You guys remember in the beginning of the live stream, I talked about, look at this break lower. That's a clean level. I marked out the clean level. I said we want to be buying on a retest of that level, put stops above the high. That's an idea. Now go test it. All right. You can view this as a homework or whatever. Take that idea. If you don't have a system, take that idea, back test this for the next 3 or 4 weeks on 400 different trades. If you have positive results, demo trade it for 2 months. If you're profitable, go live. All right. But we're talking about like 3 months of work. It's not just, all right, I'm going to try this and then, you know, next week I'm profitable. We're talking about months. Most people who are trading professionally have been struggling for years and years and years. So this is difficult. Okay, so can you please guide me on how to build a system? Okay, have an idea. What I want you to do is I want you to go on YouTube, okay? And I want you to search for trading system, simple trading system. Watch a video, see someone explain something, and then you test it. For the next 2 weeks, you backtest that idea and you see, is it actually working for me? If yes, you continue testing. If no, you do the same thing again and you get ideas and then you refine those ideas and then you demo trade it for 2 months. And then if you're profitable, you go live. Okay. There's no easy way to say this. If you want to be making a shit ton of money, you got to work. Okay, it's simple as that. If you want to become a lawyer, 3-4 years in university. If you're going to become a doctor, maybe 7 years, you know, before you're done. If you want to become a trader, do you really think all you need to do is just go to a live stream and ask if I can sell gold? Like, I'm not like, don't take it personal, but this is you gotta take this, like, this is serious business right here. You want to be making 10 grand a month. Guess what? It's not easy. It requires work. All right, back to you, Victor.
Well said. Well said. I think I heard in your uh, um, tone that there you know you're trying to help everyone in the audience understand that it
Yeah.
takes work to get there, and I can hear a little frustration in your tone, and it is because you want people to understand that, you know, the easy way is not going to get you there. It's going to take
Yeah, people are
effort.
lazy. I mean, people are lazy. That's just the true nature of that's just the human experience. People are lazy, and it's the lazy people that. So the market is all about. You have people that do not know how to trade, but they think they can trade. You know, just by buying and selling based on nothing. And then you have professional traders. And the way the market works is the money goes from those people to the professional traders. Okay. So if you want to become professional, then you got to move from that lazy into that hardcore, work hard mentality. I'm never going to give up, because you'll be on the brink of giving up many times when you learn how to trade. It's all about, because the market's going to beat you down. The market will take whatever stop loss you have, and it's going to tell you that, guess what, I'm the master of this. You have no idea what you're doing, and that's how you're going to feel like. And a lot of people will give up, but it's really the people that do not give up that become professional traders. Like I said, it's years and years in the process.
Yeah, and for everyone who may think, hey, Jonathan is being kind of strict today, is kind of being, very hard on some traders. Well, guess what? The best teachers are the ones that are stricter. Those are the best teachers that will correct you and help you the best. It's the
Yeah,
same with a surgeon, a doctor. The best doctor might need to make you feel some pain. They say in different language, they have this saying. They say that a soft doctor causes stinking wounds, right? If you're too soft
yeah,
on your students, they're not going to grow. They're going to fail. You have to, in this case, as a doctor, you need to uh, attack that wound, open it and do whatever that you're supposed to do, and it's going to hurt. It's not easy. It's
yeah.
not going to be. It's not going to be a walk in the park, but that is what you need to become better as a patient. That's what you want the surgeon to do that to you, because that will be my health. And that's the same thing with a good teacher. In this case, Jonathan telling you that it's not easy on your ears to hear this. But if you want to progress as a trader, you got to listen to when someone who has experience is telling you this is not going to work. You have to change. You have to put in the work. You have to have that commitment. Otherwise, you might as well do something else, because it's going to
Yeah.
be very difficult for you to make it. You're better
Yeah,
off doing completely something different, because it is that's the way. There's no shortcut getting to the other side of the market, where you are a profitable, consistent trader.
I think it's there are easier ways to make money than trading. And let's say it's going to take you 5 years of learning how to trade before you actually make money trading. And people will hear this and say like, oh, 5 years, that's insane. Well, it's really not. 5 years, a lot of professional traders, they do it this for 5 years before going full time actually making money. So 5 years is not really a very, very long time. It's actually quite realistic that you need but um like it's there are easy ways out there to make money. So it's very important to have that realistic expectation before you go into this. I mean, I had a student the other day tell me that, oh, I'm struggling with overtrading, and I'm like, well, okay, let's talk about it, and he broke it down, and like, okay, so you're taking 2 minute trades. Okay, so what's the problem here? Well, I'm taking 2 minute trades. Yeah, it's obvious that you're taking 2 minute trades, and after a certain amount of trades, you start taking trades that are not part of the system. So I told him, go back, like back test your system. Backtest your system, and then look at the average trades per week. Okay, so he went back and backtested the system and said like, well, on average I have 5 trades a week. So how many are you taking? Well, I'm taking 50. Okay, so he has on average 5 trades a week, and he's taking 50 trades, which means that he's taking 45 trades extra than what's actually part of his system. So I told him, okay, you have a new rule to implement in your trading. Never take more than 5 trades a week. Yes, it's an average number. So sometimes you might overtrade by 2 trades a week. Sometimes you might underperform, undertrade with, a couple of trades. But on average, you should be able to stick with that. And then that's going to help you to filter out the bad signals of the system. So a week goes by and he comes back to me, okay, I had this rule of only taking 5 trades per day. And I'm like, oh, great. How did it go? Well, I took 15. I'm like, what do you mean 15? If you're supposed to take 5 trades a week, you're not supposed to be taking 15. It's like, well, I can't stop myself from over trading. And I'm like, well, okay, if you really cannot stop yourself from over trading, first of all, what I would say is reconsider if trading is really what you should be doing. And from that point on, he started taking way fewer trades because he realized that, oh shit, if I can't do this, then I can't be a trader. And if I can't do this, then I need to quit. Okay, if you cannot if you can't get a hold of yourself and follow your own rules, you have to give up the dream of being a trader. So at that time, it's like, okay, that's kind of like what shifted his mentality. Because sometimes you need someone to tell you that if you can't get a hold of yourself and really figure this out, then you have nothing in this game. You know, you're not supposed to be in this game. Sometimes that realization is what you need, and therefore sometimes I can be a bit blunt, you know, because I think in today's day and age, we're we're very sensitive, and people are afraid of hurting other people's feelings. But this is trading. This is one of the rawest, you know, the most rawest profession there is. If you make a mistake, there's no one to blame. There's no one to blame. You can't even blame the trading software that you're using, because it's up to you to know its limitations. Like, it's, you only have yourself to blame.
Yeah, for sure. Yeah, actually, the idea, by the way, it's obvious that I was stopped out, but
Yeah.
if you didn't notice
Yeah.
that,
Yeah.
um,
Uh,
I think it's not something people want to hear.
no.
Because the majority of the traders, sadly, are not profitable, right? And
Yeah.
we all want to have that dream, keep that dream alive, of becoming profitable trading. But the sad, crude reality is that the majority of them will not reach that area. And the last thing people want to hear is that, it's not for you, like, to give up. No one wants to give up anything. But I think there is, and another, to the extension of the same thing you were saying, um, you there is such a thing as an opportunity cost,
Mm.
which is, if let's say you have someone who, for whatever reason, isn't going to make it. It is in the best interest of that person to realize this as fast as possible,
Yeah.
because while you are trying and trying, weeks and months and even years go by. And guess what? If you realize that after 5 years, guess what? Imagine what you could have done with your time in those 5 years. You could have done another career. You could have been, gotten another degree. You could have gone open a business, whatever. There is a cost invested as you're trying this project, this career as a trader. And we already know that the majority will come out the other side victorious, right?
I
It's
think I
going to
think
be a
you know, I think it's very important here to understand what we're talking about in terms of, you when comparing yourself, you should compare yourself to who you were in the past, and not someone else. That this is very, very important, because, like, we can sit here and say, like, oh, if you're not as profitable as, you know, Order Block 2000 Pip Hunter on Twitter in 2 years, then you have to give up trading. That's not what we're saying. What we're saying is, and I would say, put a time limit of 2 years. Put a time limit on yourself of 2 years. If you see 0% improvement, like, and I mean 0%
exactly.
improvement to who you were in the beginning, then you can reconsider. But if you look back and say, what was I doing 6 months ago? Am I better or worse 6 months ago? If you are better, then continue. But if you sit there 2 years later and say, you know what, I'm taking the same trades as I did 2 years ago, I'm making the same mistakes as I did 2 years ago, and I see no progress at all, then maybe trading is not for you. Okay. But if you see that there's even a slight improvement, then trading is absolutely for you, because trading is all about learning from your mistakes. And I don't care who you are, if you're able to learn from your mistakes, then you're going to be a good trader. Like, you have potential to be a great trader. But some people,
Correct.
man, EU is just absolutely dying here.
This is GU. Yeah.
Yeah,
This
but
is
I'm,
the
I'm
area
looking.
that
Yeah, I'm looking at
this
EU,
is
and I
the
said, I had that level I was looking at, and I was just completely broke that level and just shoot straight down, and that was basically a stop loss. But yeah, what I was saying is, like, put a time limit. I would say realistically 2 years is a good time limit, because I would say that it takes about 1 year to just understand what the market is, like, understand what all of this is, and then the year after is like implementing an idea. And I mean, the first year when I started, I didn't have any idea of anything really. But it's really in the first idea where I, started having. It's the first year when I started having, or the second year when I first started having ideas and actually creating a system. So this might discourage a lot of people from trading, and that is not my point. My point is to tell you that you have to be honest with yourself, and like if you're just totally obsessed with trading and technical analysis like I was in the beginning, like I love this still, but I guess I'm as obsessed, maybe more now. But um what I'm saying is, if you really love this and you are just completely obsessed with this, but after like 4 or 5 years you're seeing no progress at all, like in that amount of time you could have, you know uh gone an education and became some, I don't know, like an AI engineer or whatever. So it's like, this is also a discussion about time, because time is the most valuable asset that we have, and you don't want to be wasting time. So remember this: you don't want to be wasting your own time. So when you make a mistake in trading, and you know that this is something that you've done in the past, and it's something that you have problems with and issues with, you owe it to yourself, your family, and your future generations to fix that problem. Okay, just fix the problem. If you just continue making the same mistake over and over again, you're just in this negative feedback loop, and you're just wasting time. And the truth of the matter is, your stop loss is just someone else's entry. You're just giving away your positions, your liquidity, for someone who is actually making money, and you don't want to be that person. So just make sure that when you make mistakes, you document it and you try to learn from it. Okay, so this is interesting. Okay, I don't know what's wrong with me. It's now 5 years, but I have not yet developed a system. Okay, so this is exactly what we're talking about. This um this is
This is
exactly what
what
I'm talking about.
th-
Yeah,
this is the this is what will make or break your end result. Because the
yeah.
fact that you're 5 years into it, that's not anything, that's not wrong, that's not that is part of the process. It's going to take a long time. But if you are not able to develop a system, that's going to decide for you right there if you're going to have a good chance of winning in the end or not. So I think this is the source or the thing that you should be working on. This person in the audience, you need a
What I want
system.
you what I want you to do, okay? What I want you to do, yes, okay. So what I want you to do is, it's now Tuesday, okay? Next week on Monday, we're gonna be back. Okay, we're gonna be here tomorrow as well. But next week on Monday, I want you to be back in this live trading room on Monday, and I want you to have told me that you're at least looking for ideas of a system. Now, it's quite simple, okay? All you have to do is, go on YouTube and search for a trading system. Okay, a forex trading system could be whatever, and then what you want to do is you want to make sure you understand it and it makes sense to you, and then you want to start back testing that. And there's no easy way to say this. It's not easy. It's going to be complicated, but you need to have an idea. And you know what? I'll give you an idea. Okay, so I'm going to give you uh, an idea here, and this is actually a perfect example. We're on GBP USD right here. So what I want you to do is, I want you to look at, and now again, it's important that you choose an approach and a system that you understand, that makes sense to you. If this makes no sense to you, then this is not something for you. Then you should go onto YouTube, or you should look at previous webinars where Victor has broken down his way of trading. That's completely different to me. From my perspective, it makes no sense. I'm not trading that, but for you, it might make perfect sense. Now, what I do here on the daily is, I want to find a strong, an area where you've had a strong breakout, where there's a clean breakout. There's like a what we call a thrust candle. Again, something from Trader Dan today. But you want to have a thrust candle. What I see here on GBP is we have an untested level. What this means is that we have a resistance level here. I'm just going to mark it out like that. And then you have that candle breaking through this resistance right here. Now, this is on the daily, but this can be applied on basically any time frame. So that's the breakout right there. Now, I want to see if this is a clean level on the 4 hour as well. And I would say not really a clean level. You would want to have a strong candle. You'd go maybe starting here, going through the whole level and then closing up here. But let's take the example on the daily. And I think this could be interesting to just test on the daily. So you want to be looking for a breakout, okay? You want to be looking for a breakout, and then you look for the level that broke, and it want to be a clean level. There should be no retest, prior to the breakout and the close. And then what you want to do is you basically want to buy this level when price retests the level. You want to put your stop loss below the low of the move that created the break. And then you'll have to figure out, TP and stop loss and entry. But that's a general idea that you could start working on. So try this out, back test it, and build a system based on that. There's no one size fits all. There's no one way that's going to work for you. You will have to develop this on your own. But what I want you to do is I want you to come back on Monday and I want you to tell me that you've actually started looking into this. Okay, you should backtest this at least for 100 trades and just try it out. All right, guys, we are about 2 hours right now, and that's gonna have to be the end of this live stream. We did not have a giveaway yesterday. We did not have a giveaway today. This means we're gonna have some extra giveaways tomorrow. So make sure that you do come back tomorrow, and you will. I'll be adding probably do 3 giveaways tomorrow to compensate for yesterday. Yes, Evans, you just got the account. Everyone should have been credited. Every winner of yesterday's last week's giveaways should have been credited in their hub account with the 5ers. So yeah, that's it. And comments like this. If you're a fundamental trader, then yes. If you're a technical trader, then this is false, basically. So. If you're a technical trader, then it makes no sense. Anyway,
maybe that's the idea. The people in the audience would like to, trigger you.
Yeah, I think maybe. I think so. But yeah, guys, if you don't have a trading system, you shouldn't be trading. If you don't have a clearly defined edge, you should not be trading. Please, guys, go out there, get a backtesting template. You can Google the 5ers backtesting and you'll find it. Guys, just do it. It's important. It's we don't want to be wasting anyone's time. You don't want to be wasting your own time. If you want to become a professional trader, you got to take this seriously. You got to be approaching trading just like you would be approaching starting your own business. It's not for everyone. It's not easy, but with enough, resilience, it's possible to become profitable. All right,
yes,
guys.
indeed.
On that note, I'd like to thank you all for joining. And tomorrow we'll be we'll hope that we have something more interesting going on in the markets
sure.
to trade.
I think it will be. I would like to invite everyone for tomorrow's stream as well. It will be the last of the week, so please tune in. I'm sure, as you have seen today, we care about your growth. This is not about entertainment. This is not about saying things that sound nice, and leaves you with a warm fuzzy feeling. This is about real progression. Even if it is painful to hear, it is the right thing to say. If it is, we will be saying we will be telling you about it. And we're authentic traders, so we know what it meant, what it took for us to get here. It wasn't easy. If it were easy, then we would have a bunch more traders being profitable and consistently so. That's not the reality of the case. It's only a handful of people who come to the other side. So, for that reason, I think it's going to be in your best interest if you join us tomorrow and our future streams as well. So thank you for your time and see you again soon.
All right. Thank you, guys. See you tomorrow.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content.